So will consumers save Wall Street?
Our Fox panel is here now to discuss it. They are independent trader Eric Bolling. We have, of course, our friend Charles Payne of WStreet.com, Pat Powell from Powell Financial, Gary Kaltbaum from GaryK.com, and Peter Schiff of Euro Pacific. He is also the author of Crash Proof. Okay, so gang, it makes you wonder, are the consumers really going to be the ones to save Wall Street? Peter, I'll let you take it, especially when we have not great numbers from Home Depot, but pretty decent numbers from Walmart.
Well, remember, it's excess consumer spending. That's one of the reasons we have all these problems to begin with. Remember, consumers borrowed a lot of money and spent it buying houses they couldn't afford. Similarly, you look at our huge trade deficit of $50–60 billion a month. That's all the consumer goods that we're buying that we really can't afford to pay for. So just like we have a bunch of subprime borrowers in this country, we have subprime consumers, meaning we really can't afford all the products that we're buying. And so if Americans go out and spend money they don't have this Christmas, that's nothing to celebrate. We need to stop spending. We need to start saving for a change.
But, Charles, is that short change in Americans? Are we so much of a debtor nation that we're out there just spending nothing but money that we're borrowing?
Absolutely not. Well, look, the real correlation is between employment and consumer spending. Forget about everything else. And the doom and gloom, yeah, it works in consumer sentiment. People hear the story over and over. They hear the Peter Schiffs. They read the local newspapers, and they feel like maybe the world is coming to an end. But after they read all this stuff, and after they tell the surveyor, yeah, I'm feeling bad, they walk into the mall and start spending. But, Peter, you know what really made this a great week, a great number for Walmart? International spending. What's going on with that? Last week, MasterCard had an incredible number, beat by 38 cents because consumers in China and Asia are spending, consumers in Europe are spending. It's not just an American story. By the way, the weak dollar, tremendous for Walmart sales, up 17% for the quarter.
Peter, quickly.
Well, I mean, the weak dollar isn't helping. I know that foreigners are spending money. I was down on my boat this weekend, and there was a boat for sale next door, and there was a Canadian couple that had just come across the border to buy it. They were coming here and buying our boats because they're dirt cheap for them. So the fact that Americans are losing out on some things because our currency is so weak is nothing that we should be proud of.
Eric, Peter's out on his dinghy. Just kidding. Just kidding, Peter. I'm sure it's a huge yacht, but what do you think, Eric?
Well, to a certain extent, Peter's right, and don't turn the channel. He's right in that the U.S. consumer can and has slowed down, but that's okay. Charles makes the point that the world consumer is picking up at a rapid pace. Look, we save at about 0 to -1% in the U.S. Chinese save at 50%. 50% of what they make, they save, and they're spending. Indians are spending. They're buying gold. The world is buying things. Let me just kind of qualify what I see going on here. I think he's right. I think Peter's right. You stay away from the retail stocks because there may be a little bit of a slowdown in consumer spending, but you stick with the international companies that Charles points out, and they'll make up the slack, and your portfolio will be in good shape.
But, Pat, are you seeing any bargains, though? Could consumer discretionary stocks, whether it's retailers or restaurants, the second hardest hit group in the S&P behind financials, aren't there not any bargains there at all?
There's bargains, but I think you have to be incredibly selective. The story started with Home Depot having terrible earnings and Walmart having pretty impressive earnings, given how big they are. But I think Charles has it exactly right. Walmart is an American story, but it's an international story. 3,000 stores are outside the United States, only 4,100 inside the United States. They're on their way to a 50-50 international company. So these are important things to
So when you're
pay
looking
attention
to pick stocks, Pat, do you go with the companies that have that so-called global footprint?
Absolutely. I think you would be foolish in this environment not to have pay attention to global markets and not to pay attention to where a company's earnings are coming from.
That being said, though, don't try and pick the bottom on some of these stocks. Some of these retail and department store stocks have just been horrendous. They're down 20, 25, 30%. Nordstrom down 25%, Federated down 24%, Walmart flat for 2 years. Stay away from those things that haven't worked. They're not going to work. Things that did work in the past. Tech worked. The world hasn't changed that much. Tech took a little breather last couple of days.
Let's bring Gary K in here. Gary K, where are you, man?
Well, I'm on my 150-foot yacht right now. And, look, first off, retail stocks have been in a bear market. They are bouncing today only because they have been destroyed. I mean, some absolutely crushed. If you look at just a picture of Nordstrom's or Kohl's or J.C. Penney, so I'd be careful about that. On the other end of the spectrum, look, We have been hearing for years the death of the consumer, and it just never seems to happen. I do realize there's issues out there. I've been calling the issues for the last couple of years, whether it be the decline in housing and not being able to use your house as an ATM anymore. I'm just not sure I'm there yet, that the end of the world is at hand. Would I buy retail stocks? I have a couple of names that I like Decker's Outdoor Footwear, Nike. These held up the best. These are leadership. The rest of the area I would not touch. I think there are a lot better places in the market. And as far as Christmas, I'm going to call it okay. I think we have an okay Christmas. Not great, not good, but not bad like some people think.
And Walmart did say, Peter, that electronics are selling. So are you saying that that is not at least a small optimistic sign?
Look, again, I don't think that excess consumer spending, remember, consumption is the ends, not the means. Consumption is the rewards for economic growth. It doesn't produce it. Unfortunately, we've borrowed so much money to consume in the past that our future consumption is going to be sacrificed. These countries like in China where they're saving 50%, they're sowing the seeds for future consumption. Certainly, consumption all over the world is going to grow.
Hey, Peter,
and that's why,
that's it. Hold on. We got to take a quick break, guys. The Dow Jones Industrial's up 227 points. We will be right back. Stay tuned.
For his wife's birthday party, but in a rare and candid interview, Neil Cavuto sat down with him at the Mid-State Correctional Facility where Mr. Kozlowski is being imprisoned to talk about his life behind bars, his divorce, and hopes for an appeal. And Neil Cavuto is joining us now from Verona, New York, just a stone's throw away from the prison. Neil, how was he? How was it?
There's nothing weirder than just going to a prison, I got to tell you. And to see in that prison arguably one of the most celebrated and touted CEOs of all time, relegated to washing floors, doing laundry, tasks that command a whopping salary of not more than $1 a day. And this is a guy who at his height made more than $170 million in a year. So it's an amazing come down for a guy who seems extremely humbled and battered by the whole process. But in an hour-long interview today, guys, he was really sort of stepping back from it and saying, I'm appealing this case. I'm appealing on the grounds that while I earned a great deal of money, the gist of what a lot of people find so offensive is that lavish lifestyle and the umbrella stands and the shower curtains. We got into that. He said he didn't know anything about those expenses, but that not only shareholders but his board of directors approved of those eye-popping pay packages. This is from earlier today.
There was a deal in place. The deal was there, and I earned every single penny of that deal.
Do you think in retrospect, even if it was all on the up and up, it was greedy?
I don't think anybody set out to pay me the amount of money they paid me, in excess of $100 million a year. I do not believe that anybody is worth that in business. I mean, you can contribute so much, but that's a hell of a lot of money. However, what did happen at Tyco was I was paid mostly in stock. So my compensation was variable and it was at risk. And that's the way the board wanted it. That if the
stock didn't do well, if the company didn't do well,
I wasn't going to get paid, and it was at risk. If I didn't make certain hurdles and grow the company by some percentages, I wasn't going to get paid anything at all. There would be no bonuses. So it was all variable and all at risk.
All right, so all at risk. The question is now whether what's going on in the financial world, and he is very attuned, ladies, to what's happening in the news with Citigroup and Merrill Lynch and everything else, hinting that he might be getting some company there. But he says they never sue you when the stock's on the way up. They sue you on the way down. And they look for scapegoats, and CEOs are convenient ones. He's clearly fighting this to the end, saying that if the biggest sin is buying expensive artwork and the likes, he shouldn't be in prison. In fact, he said, had he not had that umbrella stand or that shower curtain or that expensive artwork, he wouldn't be in prison. Interesting. So
he's basically saying, I'm greedy, not guilty, and people were confusing the two, Neil.
That's exactly right, Liz. He says, if the worst thing you could say about me is that I spent a lot of money on things that I don't even remember right now. That is maybe selfish. It's a little greedy, but it isn't the kind of stuff that should land you in prison. And he points out with an 8 to 25-year prison sentence, he is being punished far more than the likes of Ivan Boesky, Michael Milken, a host of others who've done time behind bars for what he considers to be far greater offenses.
Neil, I so look forward to seeing the rest of this interview. Great job, and you were right there with him. Incredible stuff. I really look forward to seeing more.
It's a humbling experience. Man, oh man, that's
Indeed.
not a place you want to be.
Neil Cavuto. And again, you will see the entire prison interview tonight at 6 and 9 p.m. Eastern. And as you just saw the excerpts from Neil Cavuto's jailhouse interview with former Tyco CEO Dennis Kozlowski, he says, yeah, he was overpaid.
Yeah, but we want to talk about that. Overpaid. Was he, greedy but not guilty? Let's talk about that with our panel. And welcome Forbes Associate Editor Victoria Barrett with us. Victoria, what do you make of that? It is worth noting that, say, with Enron just went under, went out of business. WorldCom went bankrupt, but Tyco still running, still in business, and he left a healthy company.
Sure, and under Kozlowski's watch, the stock did very well. If you were a shareholder, you were quite happy. He did a lot of acquisitions. I think what he was guilty of was overzealous acquisitions. He was getting growth and juicing earnings that way. But there was no smoking gun here. There was no incredible fraud. There was no cooking the books. I think his timing was just wrong, and the prosecutors wanted someone they could put in jail, and he made a couple bad choices.
We're all very forgiving here, and I think that's a great quality to have. But Peter Schiff, he publicly declared back then when he was running the company that he almost never sold the stock. In the meantime, he and the CFO Mark Schwartz were selling a lot of it to the tune of about $500 million.
Yeah, that's part of the problems with stock-based compensation. Everybody thinks that aligns the interest of the CEO with the company, but it really doesn't. What it does is it encourages CEOs to take a lot of risk that in the short run appears to be paying off. But ultimately, in the long run, the shareholders are left holding the bag, and the CEOs have already cashed out. That's what you're seeing right now on Wall Street with all these losses in the investment banks and the financials. For a while, all these risky loans appeared profitable, but in reality, they weren't. And, at the rate the dollar is falling, pretty soon we're all going to have $6,000 shower curtains.
Well, Charles, Kozlowski was talking.
Thank you. Democrats have long claimed that the Bush economic policies are making the rich richer while sort of leaving some of the poor behind. The Treasury Department has taken a closer look at this and finds that, for now, it's not entirely true.
The numbers show half of the taxpayers who were near the bottom money-wise have moved up considerably in the last decade, while only about a quarter of the top 1%, the super wealthy, have remained at that level.
In fact, the median income of that group has actually declined. So does this Treasury Department study throw cold water on doom and gloomers who claim only the upper classes are growing under the Bush presidency?
All right, let's pose that question to our panel once again. Somebody in the upper income, or Eric Bolling, obviously. Do you feel any wealthier, Eric?
Well, yeah, whether I do or not, I'm not really going to tell you on air. But look, there's a couple of things that Pat and I were talking about in the green room. I mean, and she's going to hit on this. She said this in the past on air, that you look at Treasury receipts, and what you've seen is a massive increase in Treasury receipts. And what that tells you is the economy is growing. We're growing at a nice clip. You read, 1.5%, 2.5%. Don't buy that number. We should talk to Peter about that. Probably the real number is somewhere around 5 or 6, because no one pays taxes that they don't have to. So if the Treasury Department receipts are increasing at 11 or 10 or 11%, that means the economy is growing well. Employment's in great shape. Look, again, do I have to say this one more time? Stay away from my dividends tax. Stay away from my capital gains tax. I don't care what you do with the rest.
Since you threw it to Peter, I will ask you, do you get a sense that the rich are getting a lot richer while leaving the middle class behind?
Well, some of the rich, certainly the rich on Wall Street have done really well. But I think in general, the middle class and even many in the upper class are not, in fact, better off. They're worse off. I think two of the big flaws of the study, I looked at it, is I think, number one, they're underestimating how much inflation there's actually been over that period. So I think that's skewing the results. I don't think we've had these big income gains if you have a real inflation rate that you use to adjust them. But also, they're not looking at the tremendous amount of debt that the typical household now has that they didn't have 10 years ago. And, a lot of people will try to minimize that by saying, well, but they have a house, and that house has this huge value. But I think those appraisals are phony. I think many people's homes are worth 20, 30, 40, or 50% less than what these studies are assuming. Meanwhile, there's tremendous amount of debt that Americans have that we didn't have in the past, and we have to pay that debt.
Pat, Peter brings up how they are able to judge inflation and how they kind of discount the worst parts of inflation. They give it a lower oomph and sort of estimate for that. That is disconcerting to a lot of people because, numbers can be skewed in any way, shape, or form.
They can be skewed, and people have been arguing, economists have been arguing over the way the inflation numbers are calculated for decades. There was a time when it was overstated. Now Peter says it's understated. The fact is you just need consistency in the overall inflation numbers, and one of the reasons why inflation numbers are coming in so modestly is the productivity numbers are so great. And that's what you're seeing in technology. When you pick up the telephone today and you dial for information, you don't get an operator. You get maybe James Earl Jones, which is what my telephone company gives me. And it's all automated. Well, you know what? It's a lot cheaper to have a system in place than it is to have employees. Those productivity numbers then allow other people to get raises. They're non-inflationary. So I think you have to look at it in balance. Certainly there's aspects of inflation like food inflation and energy that are a problem for a lot of people. But on the other hand, the television you put on your wall, the computer that you just bought, these have all been coming down. And inflation is, when you measure it, you have to measure a total market basket. You can't just be selective about the things that are really troublesome.
Right. And Gary, I was looking at that study as well earlier. I mean, this is a 10-year span of time. I mean, yes, housing is a problem right now. Yes, we're in a slump, but that's not going to be over a 10-year period, which is what this study was.
Right. Look, we don't live in a perfect world. I can show you stats that look good, stats that look not so good. I've got to tell you, look at one stat, the net worth of this country. It is an all-time high. And, some of Peter, what he says, have metal to it, but overall, we can talk debt, but we also have to talk about net worth. If everything he says is true, the stock market would be at 7,000 right now, and I think the markets are saying a little bit different. Yes, we've corrected here, but we just had 3.9% GDP, speaks for itself. Unemployment is 4.7%. I just don't think things are as bad as some people are telling you.
Let me let Victoria jump in here. Can you really judge how well things are going if you look just at the stock market? Because a lot of people would say this is a big gambling casino, the stock market.
It is in some senses one huge hulking casino, but it's also a way to read the temperature of the economy. The stock market is trying to predict what's going to happen going forward at companies, and that affects all of us. That affects our wages. That affects whether we're employed or not. So the stock market, I think, is a decent indicator, but you also have to look at wages. You also have to look at employment, and those have held up tremendously despite lots of disruption. I mean, the mega disruption is that we're going from an economy that produces things to an economy that largely produces ideas. That could be a really disruptive thing, but we've done fairly well.
All right, guys, so what's the answer, Eric? I mean, what is the answer? Besides leaving your dividends alone, got that.
We get that message.
That's interesting. There are markets. There are indicators. The stock market is one of them. The housing market is another. The employment market is yet another. Is there inflation? Sure, there's inflation, but it's under control. Right now, things like oil and food are more expensive. They'll come down, and they're not going to be negative. They're not going to be deflationary when they come down. So we won't be able to say, hey, Peter, look at the price of oil. It went from 90 to 40, or the price of a banana just got cut in half, and say, is this deflationary? We won't be able to do that. That's why they're removed. You look at a bigger, broader picture of things. Inflation is at the Fed's comfort zone. It's between 1 and 2.5%, and it's okay. Things are okay. The employment market is in great shape. The housing market needs some help.
And we want inflation. The worst thing that could happen is deflation.
Oh,
Let me give you what deflation gives you. It gives you 1932, 1933, 1934. Those were deflationary periods. We want inflation. We just don't want a lot of it.
Before we wrap this, go, Peter. 20 seconds.
Well, that's a bunch of nonsense. Falling prices. We had falling prices from 1790 till 1813 for 140 years. That's the best thing that can happen to consumers, is that the cost of buying things goes down. That's what you want. That's the natural tendency in a free market. And I disagree. We've had a terrible economy these last 6 or 7 years. It's a complete disaster, and we're about to pay the price for it.
The millions of people.
Where are you living?
All right, let's argue about that.
Where are you living?
We have to go.
Schiff, Peter, what are you looking at today? Because obviously we've seen a nice gain on the Dow, but is it real?
Well, actually, today, for a change, even if you price the Dow in gold or euros, it's actually up on the day, which is very rare. But, I wouldn't get excited about it. I think the real opportunity here is to sell into it. I mean, that's what investors should be doing, is using any strength to sell. This is probably a short covering rally, judging by what's going on. But more importantly, when you sell your stocks, you get dollars. You've got to complete the transaction. You've got to take your dollars and sell those, too. Because it's not just U.S. stocks that are in danger. It's U.S. currency.
Gary Kelpom. Welcome back, and we have just about 6 minutes before the closing bell. It is a huge day for the bulls for both the Dow and the NASDAQ, Cheryl.
Big rally in tech. Let's go out to Gary. I want to ask you really quick. I was looking at this B of A thing this morning, the $3 billion in pre-tax charges. You still a little nervous about a day like this, Gary?
I'm nervous every minute of every day right now. I have to tell you, Eric said it best. I have been doing this for many years. Over the last couple of months, I have never seen such about faces, such mini crashes, and then V-shaped moves back to the upside. It is like the Hulk roller coaster over at Universal here in Orlando. It is basically teasing everybody's nerves right now. The big thing for me, if these companies, I believe 3 of them came out today and say everything's better, I think it was Goldman Sachs, Morgan Stanley, JP Morgan, if they pull a Merrill Lynch and come out in a week from now and say, whoops, we got another $5 billion, we're going to head right back south before you can say boo. That's going to be something to watch out for.
Charles, Gary's got the Maalox and the Prilosec cocktail going. What about you? You love this, right?
Are you kidding me? I love it. I keep telling people. I knew, you saw this all year long. Keep buying on weakness. Don't be shaken out of this market. I feel so bad for individual investors who keep getting spooked out in the market. The stocks, right now, in my opinion, are as cheap as they've been in almost 20 years.
All right, Pat?
Stay on your plan. If you don't have a plan, get one.
Peter Schiff.
Look, this is very dangerous to be in this market. There are a lot of problems. It's just getting started. People have to sell into strength and get out of the dollar. You can't just be in cash. This is a much bigger problem than that. The market's going a lot lower. The dollar's going lower. Just sell these rallies.
Eric.
I really, that record's getting old already. Yeah, the dollar's going down, but there's ways to make money. Look at good international footprinted companies and stay with them because the market's good. And as Charles said, it's cheap.
I'm not telling people not to invest outside the country. I do it all the time. Just stay out of U.S. stocks.
All right. Well, okay. Let's get on to Nicole Petalides, the New York.